It's about that time of day again. My name is Joseph. It's Wednesday evening, June 28th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX tonight. Crude is bullish and trying to finish off a measured move tomorrow, but we're getting a little too close to some key resistance levels up here, so we're looking for traps to avoid buying high tomorrow. The S&P is bullish with a spike in channel as it tries to retest last week's high, and we're looking for rotation back down to channel lows, or even better, down in the battle zone for more reliable buying opportunities tomorrow. Gold is bearish and trying to retest today's low, but we have a wedge, a measured move, and a trading range all acting as support. So we're looking for traps to keep selling high tomorrow. Euro is bullish, but we just finished the target from last night's newsletter. So we're waiting to see either a successful breakout pullback or a two-legged pullback off the highs for better buying opportunities on Thursday. And of course, don't forget the FDAX. The DAX is bullish, and a spike in channel tells us to look for buying opportunities at the low of the channel. And of course, we're watching the battle zone tomorrow. I have a great newsletter in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up for tomorrow. We got the end of the month coming right around the corner. Volatility is being kicked up. Looking forward to the big day of trading with you guys tomorrow morning in our trade room. Before we jump in though, I do want to remind you, the only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link and come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social, StockTwits, Twitter, Facebook, LinkedIn, pick whatever flavor you like the most. Follow me on social and get links and updates and charts throughout the week. Grab those charts, lower left-hand corner. How easy is that? Have all the charts in tonight's video. Have them ready on your computer for tomorrow. Right where it says here, click here to download today's chart. Follow that link. And please don't forget to grab that free pass. I'm telling you, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. If you're not an advanced member here at School of Trade, grab that free pass in the upper right-hand corner. And don't forget, I'm not a robot. I'm always here to help you guys out. Hit me up on live support if you have any questions, any step of the process, right? Look forward to speaking to you guys and answering all your questions. Let's jump right in and get a big, big day tomorrow. Tomorrow, of course, being Thursday, June the 29th. Just a heads up, tomorrow will probably be, for a lot of traders, the last full day of trading of the week. We are going into what is most likely going to be seen as a holiday weekend. We have the 4th of July Independence Day holiday next Tuesday, so I assume you're going to see a lot of traders using that as an excuse to get out of the office early on Friday and get a very nice 4-day weekend right ahead of that holiday coming up next Tuesday. So be aware, tomorrow will probably be the last full session that we get. We'll talk more about the plan for Friday's session though, obviously in tomorrow night's newsletter. We are expecting to see increased volatility as we go into the end of the month, and tomorrow we're probably going to start seeing a little bit of lower volume towards the end of the day, so please keep an eye on the time tomorrow afternoon. As it looks like news here tomorrow, we got some ECB economic sentiment tomorrow at 5 a.m. We get the GDP tomorrow morning at 8:30 a.m. Yeah, jobless claims are also in there, but I don't think someone's going to worry about jobless claims. GDP will be the big news for tomorrow, though. We get some news from Japan tomorrow night. We'll work on that tomorrow night in tomorrow night's newsletter. But bottom line, though, is tomorrow it's ECB announcement, or should I say economic sentiment tomorrow morning at the 5 a.m. hour, and of course GDP at 8:30 a.m. So get at it early. If you're in London, look for 5 a.m. If you're joining me tomorrow morning for the U.S. session, 8 o'clock Eastern time, we open up our trade room. We'll be trading around that GDP report and following the plan accordingly. Let's jump into charts here tonight. So again, tomorrow, early in, I shouldn't say not early in, early out, but watch the volume tomorrow afternoon if you do plan on trading late in the session tomorrow, as it will probably be the last full day of trading here of the week. We're going to cover crude oil, S&P, gold, euro, and let's do some DAX tonight. We'll wrap this baby up. How about some crude tonight first? Crude is bullish with a messy chart. Yeah, we're coming out of inventories here this morning. And what appears to be a spike in channel on the way to a measured move target tomorrow. One thing is for sure, the bulls have control, but we're getting a little bit too close for comfort to that measured move, so we're looking for traps and failures below the moving average, down at levels of support for the most reliable buying opportunities on Thursday. As you can see here, you kind of have to stand on one foot, close one eye, and kind of look at this thing cross-eyed to see that spike in channel on here. There's a few different ways you could look at this chart right now. Obviously, that's your news release, right? Pretty impressive reaction to that news here today after seeing the API numbers send price lower. By the time we came in this morning, it was obviously here a bull market. Buyers had seen strength, held the pullback, and they were running. So for us, it was pretty much a bull day, right, all day today in the U.S. session. With that said, I think the most kind of accurate way to describe this is we did see a bull channel. The bulls did have a chance to buy low, and they are now retesting that high. So the way that I see this is, again, bulls get a chance to buy low. They're now at the objective, right? Whenever the bulls get a chance to buy low, their objective is to then go back up and retest that high. Once they get to that high, then we take a timeout. We wait and see, do we keep going or do we pull back off that high, right, to buy low? We're going to see a great example of that on the euro. So make sure you stick around about 2/3 of the way through this video tonight. And we're going to go into a lot more detail of that concept of buying low, target back to the high, and then time out. So stay tuned for more on that. So with that said, I also want to point out this strong spike up, obviously, and then what it looks to be like a spike in channel, right? That pullback goes up, right? Looks like we're getting a spike in channel out of this. It's a little bit tough to tell. As you can see, it's a little bit of a sloppy, choppy market here. Hey, it may also be a wedge too, right? It could also be a wedge here as well. So I think there's a lot of different things that you could use, whether it be a regular channel with a break and a retest, or whether it be a bull wedge or a spike in channel. They pretty much all tell us one thing. If it's a wedge, right? Sorry, if it's a spike in channel, we are now at the top of that channel. If it's a wedge, we are at the top of that wedge, right? If it's just your regular bull channel with a break and a retest, right, we are at the objective right now. All three of these clues tell us time out and wait for one of two scenarios. Scenario one, we continue and then look for that, what I call the fake out, breakout pullback, little trap low, two-legged pullback after we break through that objective. Or two, we look for that deep pullback into the battle zone to allow us to buy low tomorrow. So let's explore those two situations right now. Obviously, would love to be a buyer down inside the battle zone tomorrow. And, you know, to be very honest, I really thought about extending out that battle zone a little bit lower down to that prior month low. Then these prior month levels are always going to be magnets for us as we go into the last few drops, right, of the month of June. So prior month level definitely right on our radar there as well. I'm going to leave the battle zone a little bit narrower. I don't like to be that lazy about the battle zone. I want to make sure it's relatively narrow and as accurate as possible for you guys right tomorrow. We have rising support coming off of that low. There's a bunch of different spots here we can look for it. The first scenario tomorrow will be a trap low. We find that prior swing, price pulls back, trap low, right, just below that 62, and of course we're combining that with our rising support trend line, little trap low, definitely be the most aggressive way to do it. Another way to look at it would be a failure. Price goes a little bit deeper pullback now, goes back to the moving average. Bears try to sell it short. They fail, right? And, of course, the buyers come in, right, and buy for that failure. That's an option as well tomorrow. Hey, you might also see a deeper pullback here all the way down right into that prior month low. We might find ourselves tomorrow coming into a bear short-term trend as it goes lower here. Trend line, break, pullback. I call these two-legged pullbacks, right? Just my nickname for them. It's a trap low. It's a deep pullback off the high. And again, that may include that prior month low tomorrow. Those are all scenarios here that will allow us to buy low. The hard part is going to be we have that measured move up above us if the price keeps going higher. Now, think about it this way. If we finish off the measured move, and this is extremely reliable, one of the most common things you're going to see in pretty much any trending environment, liquid markets, of course, right? This won't work for illiquid markets. And so usually whenever we see a measured move tested, we usually get that two-legged pullback and then a retest of that high. So that'll be the big goal for tomorrow. Up, get that measured move. Don't buy into the measured move. Two-legged pullback, trap low, and then a retest of that move, right? A lot of times you go up, pull back, and do it again, right, for that good old measured move double test. Now, once we get to that measured move for the second time around, we assume these buyers are probably going to be trying to get to that prior week high. So as the market goes up, you keep looking for two-legged pullbacks. You keep looking for traps, right, until we see a significant correction and we can buy low once again. Last but not least, it's a bull market now, but as you saw in last night's newsletter, the bears had control at the end of the day yesterday, and it didn't last very long. How does this market turn bearish here tomorrow? Two things. One, strength. Two, hold the pullback. Strength, hold that pullback. Once those bears can show us they really mean this illustration, by the way, is not drawn to scale. They don't need to get below that battle zone to take control. They just need to get some strength, hold that pullback, and run to that new lower low. If they can get that, assume that prior month low will be a magnet, right, for a target going back down. And of course, we have our news low at 43.90. That'll be the next objective, and then down to not today's low, but yesterday's low, right, at that 43.55 area. Should be a very, very interesting session tomorrow. Don't buy high here right now. Again, there are three reasons I discussed at the beginning of this chart about why we're up at an area of resistance, right? Channel break and retest, wedge, top, right? Spike and channel top, right? So make sure you buy low here, and of course use the guidance for tomorrow. Don't forget, we're going to be in the trade room tomorrow morning executing that plan with all of our advanced members. Look forward to seeing you there. How about some S&P? The Emini is bullish with a spike in channel, telling us to look for buying opportunities at the low of the channel, or even better, down at support levels below the channel. Now we can see that wedge on the chart, that measured move, and the high of that channel acting as resistance. So we're staying patient for rotation back to support. We will look for traps, failures, and eventually pullbacks as it rotates back to the high. Beautiful move here for the S&P. We got that wedge target from last night's newsletter. If you recall from last night's newsletter, we had that wedge down here just below that prior month high. And as you can see, right, it jackknifed off of that wedge. Buyers make their new higher high. By the time we're in the U.S. session tomorrow morning or this morning, right, this market is running higher as a bull market. Interesting, I'll tell you, interesting to see here this strong move up for the pullback. Actually has a pretty good measured move up there. So we're at the measured move. I would also look at this as a wedge. I think the wedge actually fits better than the actual channel itself. That wedge resistance is now coming into play. And of course, we also have, right, that bull spike and channel. When you look at it, these are the same three reasons that we just talked about on crude oil. Measured move, wedge, and spike and channel. This one is just looking a little bit more tame, right? A little bit easier to see than that last chart we saw on crude oil. So we got three levels of resistance here, right? Measured move, wedge, and top of that channel. What do I want to do tomorrow? I want to buy, but I don't want to buy here. I don't want to buy into resistance. So we're looking for one of two scenarios. Either deep pullback into the battle zone or, well, deep pullback to support levels. Maybe the battle zone tomorrow. We'll see, right? Or a break up, pull back, and then go. This one looks a whole lot easier because if we can get through that measured move, hold above that measured move, we should be able, right, to crack this thing open and get that prior week high accomplished tomorrow. So always go with the trend first, right? The bulls have control. We want to buy low. A couple options here. Trap low below that 36.5 area. That'd be the most aggressive. Seller failure. A little bit deeper pullback here, right? Seller failure. Failure into pullback. There's a few options there for you as it pulls back. Failure into pullback, right? And then up to retest the high. And then, of course, one of my favorites, if we do see a little more significant pullback here, right? A little two-legged correction, bearish, right? Into bullish, right? Deep into that battle zone tomorrow. As the price goes higher, don't forget, I want to see that moving average get above the measured move. Whenever we have a major market objective like a measured move or a wedge top, I want to see price get through that level of resistance. Let's get through it. And then I like to look for what I call a fake out, breakout pullback. That means not just the pullback. I actually like to see a trap, a two-legged pullback, just because this pullback oftentimes fails. That first pullback oftentimes fails, traps you out, and then runs without you. So rather than trying to be the first one in, I like to stay patient after we break through a new high. Remember, the key is this market is not just trading higher, it's trading into the market's objective, right? Measured moves, wedges, top of that channel. Let's get this price to show me some proof. Let's go higher and then show me a nice deep pullback so we can buy low tomorrow. I hope you guys are doing great out there with me here. Hope you learned something. I look forward to earning something tomorrow with you guys in the trade room. And as always, please, please, please don't forget, if you want to learn more with me on my free trial, you can learn all about our trading strategy on our free trial, learn the markets that we trade, the patterns we use, how we find entries and exits. All that's covered inside the free trial. So make sure you join up on the website at School of Trade. And while you're here, don't forget, check out more information on beginner, intermediate, and advanced levels of membership. The beginner membership is all about technology and psychology, right? Getting your computer and your chart set up properly and getting your head on straight, right? With the proper trader's mindset. Intermediate membership, intermediate course is all about technical analysis. Everything you see me covering tonight on the newsletter is taught in the intermediate course and a whole lot more. I teach you guys what I call the price action cycle, which will change your trading career forever. In the advanced course, we now take the beginner and the intermediate and we wrap together the trading strategy and we execute that strategy every day in our trade room, 8 o'clock Eastern time. I would love to tell you more. I'm always available, guys. Hit me up on live support or email me directly. My email address is jj@schooloftrade, and I plan on seeing you guys tomorrow morning for another great day in our trade room. If not tomorrow morning, shall we do it again tomorrow? Absolutely. We'll see you guys same time, same place tomorrow. Do not forget to share this great video with a trading friend of yours and be here next time. Adios, amigos. Bye-bye for now.